Hey guys, in today's video we're going to be looking at Square Stock. If you enjoy the video, give it a thumbs up and subscribe. And before we get into it, I just want to say none of this is financial advice and you should always do your own research. Let's get to understanding the business. So Square is a commerce ecosystem. The company enables sellers to start, run and grow their business. Square combines software with hardware to enable sellers to turn computing devices into payments and points of sale distributions. Sellers gain access to technology and features such as reporting and analytics, next day settlements, digital receipts, and more. Square have Cash App, which was released in 2013 and is a mobile payment service allowing users to transfer money. Square expanded to support Bitcoin trading in 2018, and Square believe that Bitcoin is the native currency of the internet. Cash App supports investments with no commission fees, and this is all part of an effort to democratize trading and help people with less money. Square has numerous services such as Caviar, which is a food delivery program, web hosting, and a range of other services. Square has a market cap of 107 billion and is a massive company in the fintech space. Square also captures every transaction made by merchants. This allows Square to offer loans or other things based on if business is doing well. This is something that big banks cannot do. Square has two distinct ecosystems, the seller ecosystem and the Cash App ecosystem. On the seller side, there is a range of features. It allows businesses to sell their products, receive and pay money, for workers to receive money, and then for them to spend it all around the world. We will also get into the Cash App ecosystem. Cash App is a mobile payment service allowing users to transfer money. It supports peer-to-peer lending, it supports investment, and it supports cryptocurrency investment. Cash App is the fastest growing app in America and has 2.5 million investors on it. In fact, last year there were half as many people using Cash App as there are this year. Cash App has had some insane growth over the years and is currently beating out other similar apps like Venmo. Cash App has more than 30 million monthly active customers, transacting an average of 15 times per month. There are more than 7 million people using the Cash Card, transacting multiple times per week. It's also important to take a look at the market opportunity that Square has, and as you'll see, they have a massive market opportunity. The global digital payments sector is expected to grow at a compounded annual growth rate of 17.6% between 2019 and 2025 to a $132 billion market. Also, the current banking environment is insufficient for small businesses and simply costs too much for these businesses to get loan. Square will be able to change this and support small businesses, which will be a massive market opportunity. Square is also likely to be the beneficiary of the big stimulus rush incoming. When more stimulus comes into people's hands, people are likely to use this money through Cash App, helping improve Square's revenues. As you can see, Square believe they have a very small share in this ecosystem. Square believe they have less than 3% of the seller ecosystem. This shows they can have massive growth into this if their platform is truly good. And as I'll show you, their platform is growing at a faster rate than any other platform. Square have also got less than 2% of the individual ecosystem. This can grow significantly as well, and Square have a big opportunity to benefit from this. Square are also going to be launching a bank in 2021 called Square Financial Services, which is opening in Utah. The primary purpose of the bank is to provide loans and deposit products for small businesses. Square believes small businesses have been long ignored by banks and wants to change this. Currently, the environment for small businesses in banks is not sufficient and it costs way too much for these small businesses. Square provides significantly lower fees and will help these small businesses significantly more with their system. By becoming their own bank, Square will also become vertically integrated and will not need to seek out other partners. Square also promotes peer-to-peer lending, which is exactly what it sounds like, and these bank accounts are likely to be disruptive. This is because, as I've already stated, it will cost significantly less for small businesses to use the bank accounts. This opens the door to a range of things like high yield savings, credit cards, and more for Square. Let's take a look at Square's financials to see if the company is financially sound. Square has had a significant increase in gross profit this year, cash app profit, and seller profit. Total net revenue has also increased. This is great and shows that Square is becoming more and more profitable and becoming a much bigger business and justifying its $100 billion market cap. Net income has, however, been pretty rocky in 2020. The primary reason for that is because there was a lot of shutdowns, which hurt small businesses, and small businesses struggled to use Square's services because of this. Square have also made $8.8 billion in revenue by the end of 2020, a massive number. However, Bloomberg believes this number could actually be $85 billion in a few years. Let's have a look at Square's finances right now. So, Square have been growing transaction-based and subscription-based revenue at a rate of 30 to 50% year over year. Moreover, the cost of revenue is becoming lower and lower, meaning Square are becoming more and more profitable. On the other hand, revenues like Bitcoin revenue and hardware revenue are not quite as profitable because the cost of revenue is significant. As you can see, transaction-based and subscription-based revenue costs a very low amount relative to what Square are making, whereas hardware and Bitcoin costs are quite high. Square also has a very nice balance sheet. Square has a current ratio of 1.7, meaning they have 1.7 times the total current assets as they have the total current liabilities. This basically means that Square have a ton of cash on hand and a ton of things they can do with the cash. Their debt to equity ratio is slightly worse. However, Square have more assets than liabilities and they have a pretty good balance sheet. It's not the best balance sheet I've seen, but it's pretty good. Square have also noted that they are going to continue to reinvest into their business at a rapid rate, and their balance sheet could look a little bit more dodgy in years to come. However, that's great because Square are still reinvesting into their business and trying to grow their business substantially for the future years. It is important that a company has competitive advantages because it puts it ahead of the competition. Square has tons of these. As we've already said, Square is becoming a bank and is likely to destroy the traditional banks. This is because Square has a significantly more friendly environment for small businesses that most banks don't have. If banks want to compete with Square, they're going to need to lower their fees significantly and be far less profitable. Square have been operating for a long time in disruptive financial technology, and it looks like Square are going to overtake these banks, and their main competitive advantage here is their lower fees relative to these competitors. Square is both vertically and horizontally integrated. They have a range of services that are all benefiting off each other. Merchants can use these services, and this creates a sticky ecosystem for merchants. Once they are set up with point-of-scale capabilities using Square's hardware, they might try to adopt Square's invoice system, payroll, or take out a business loan from Square Capital. All of this creates a lock-in effect for merchants, which is a competitive advantage and forces these merchants to continue paying subscription fees and helps Square increase their revenues significantly. Square believe that they have a range of competitive advantages. They think they have a strong brand. Square also believe they have remarkable products with rapid development and improvements. This all ties back into Square's technological innovation with all of their products in the fintech sector. Let's take a brief look at Square's management team. Square is founded by Jack Dorsey, who is also the founder of Twitter in 2006. Jack Dorsey currently owns 13% of Square stock, which is a pretty big portion of his net worth. However, Jack Dorsey originally owned far more Square stock, but he sold this all off to help with charities in the wake of the COVID-19 crisis. Overall, he seems to have massive faith in Square and probably a lot more than he has in Twitter. Jack Dorsey has big aims to democratize finance. This means allowing small businesses to be involved and allowing small businesses to start up with low interest rates and all of that and very low fees. This is similar to Twitter, where Jack Dorsey's initial aims were to democratize media and allow people to say what they want on Twitter, even if they don't have a big platform. Square has a strong chief financial officer who previously held high up positions in Blizzard and Disney. Square did in 2018, however, have an even stronger chief financial officer who used to work for Goldman Sachs, and many people had faith in that person. However, they left Square and have been replaced with a chief financial officer who also seems pretty strong. The hardware lead was previously the director of engineering at Apple, and that means he has a significant amount of experience. I couldn't find too much on the person who runs Cash App. However, he seems to have done a pretty good job so far. Now, I've listened to David Lee talking about Square a little bit, and he has said he doesn't see the same ambition in Square's leadership team as he sees in a company like Tesla, and that makes him think that maybe Square is not going to be a 10 or a 20x stock. However, I do disagree with him a little bit, and I think Square has a pretty good leadership team, and Jack Dorsey really does seem pretty ambitious for the company. It's also important to take a look at all of Square's risks. These are the risks that Square laid out. However, I think the biggest risks are COVID-19 could continue well into next year, and this could further harm the environment for small businesses and for Square. The other major risk that I see in Square is the massive amount of competition in the space. Square are competing with the banks, they're competing with Shopify, they're competing with Visa, they're competing with MasterCard, they're competing with PayPal, and they're competing with so many people and have quite a small amount of this market so far because it is such a massive market. However, I have already said that I do believe Square will be able to beat the competition in this space. These are, however, the two key risks I see with Square. We are also going to briefly look at fair value for Square. I won't be spending too much time on this, as you should be figuring this stuff out for yourself and seeing what you believe is fair value for Square stock. I believe anything in the low $200 range is fair value for Square, and I don't see it getting too much lower than $200. However, I could be wrong, and none of this is financial advice. If Square can continue to grow their subscription and transaction-based revenue at a rate of 30%, and if they can get their margins down on things like Bitcoin and investing, Square are going to have massive profitability, and they should be able to deliver well on this $200 rate. I can see Square shares doubling or maybe tripling in the next 10 or so years. Probably less, to be honest. If you enjoyed this video, remember to like and subscribe. I'll continue posting deep dives into all of the content that you guys like to see. If you want to see any different content or anything, just type it down in the comments and I'll have a look at them. Thanks for watching.